It's July 1st. You have a new target for the end of the year.
Well, folks, we had an amazing weekend. I hope you had as well. There's a lot that happened in the meanwhile in the stock market, in the financial world. Tom Lee was on CNBC again, leaving the entire speechless panel speechless again. And we have Nvidia getting a new price target from Morgan Stanley, which is absolutely out of the stratosphere. Now, as always in all my videos, there's no BS, which means you get the bottom line first. I know you guys are busy. Not everybody has 15 minutes to watch the entire freaking video. So here's the bottom line for those who are in a hurry. Number one, Tom Lee predicts $150,000 for Bitcoin by the end of this year. That is absolutely insane given the fact that the Bitcoin price is now at the 60s. Insane. Also, predicting a 5,800 on the S&P 500. Also, a new price target for Nvidia from Morgan Stanley, raising it from $116 to $144. That's a 24% increase. That's just the bottom line. In case you needed that, you're free to go. No hard feelings at all. As long as you enjoyed the video, I'm good with that. Now, for those who actually want to watch the entire video, sit back, relax, don't click nothing, don't smash nothing, don't buy nothing, just listen. So let's start with the price target first. Now, Morgan Stanley had $116 per share on Nvidia, which is kind of high. It's not one of the lowest ones, and they got it overweight. But now they've raised it to $144, which is a 24% increase. And the basis for this assumption is not so much market sentiment. They actually gave a pretty good reason, the rationale that makes sense to me. They basically said, look, the fact that the earnings are estimated to be X, and we think that the earnings are going to be X plus Y, basically allow us to provide a higher price target. Essentially, what Morgan Stanley is here to tell you is that they feel that the earnings are going to be better than expected for Nvidia, and that's why the company and the stock deserve a higher price target. Now, I actually broke it down in my DCF calculator in Stock MVP, and this is what I found. So the current price target of Nvidia for Morgan Stanley was $116. That was based off of a roughly 40% revenue growth for the next 5 years at a 10% weighted average cost of capital, at a 10% discount. So given that that price target was based on these numbers, we can infer that that $144 is based on a 45% revenue growth for the next 5 years. So essentially, what Morgan Stanley are saying to us is that they feel that the earnings of Nvidia will grow not at 40% per year for the next 5 years, but rather at 45%. Now, for a company like Nvidia, it's a very interesting debate, but it comes down to one simple question. How long will Nvidia remain the quasi-monopoly in this industry? Right now, they are literally the only shop in town. There's so much demand. They don't have enough supply. They can literally charge whatever they want. It's almost like this drug trafficker. You know what I mean? Whatever the price is, it's going to be bought. So this is the situation right now, and that's why you're seeing all this revenue spike that's going parabolically. But the big question about Nvidia is how long will this situation continue? How long until competitors come in and take a bite out of Nvidia's market? It hasn't happened yet. We don't have anything on the radar that's about to dethrone the H200 or even the Blackwell. So right now, it's not there. The question is, does it happen in the next 5 years? Because if it doesn't happen in the next 5 years, the 45% revenue growth for the next 5 years actually makes sense. But if a competitor will come in and take a bite out of Nvidia's business, then we might not see 45%, we might see 30% or 25%. It all comes down to, do you believe that Nvidia is going to remain this somewhat monopoly in this market in 2029, yes or no? If you believe that that's the case, Morgan Stanley actually makes a lot of sense. If you don't, this is a price target that's not for you. Very simple. Now, Tom Lee was also on CNBC again, and he was talking about Bitcoin and the S&P 500, two things that I think you all are interested in.
It's July 1st. You have a new target for the end of the year.
2025 earnings look a lot stronger than we thought at the start of the year. I'd say between now and year end, stocks should be higher. I mean, we've had a strong first half already, and second half won't be as strong as the first half, but we should build upon those gains. So yeah, it looks pretty good.
So 5,800 for the year, what would that be the total return? If it's 15 now, so...
Yeah, so it's, it's a little bit more than 20%.
Which would be after last year's...
24.
24. That's a couple of years no one really expected, I don't think.
That's right. I mean, that's painful for people who've been sitting in cash for 2 years, earning 5% because they missed out on a 50% gain. And that's 10 years worth of sitting on cash. So I think the end of this year is a little bit of a day of reckoning for those who've said, oh, I'm happy with my 6 trillion in cash earning 5%.
Now, he basically said, look, I hit the target on my expectations already twice. Back in the day when it was 2022 and everybody said that S&P 500 is going to just come down in 2023, it's going to be a horrible year. And it was 3,800. I said we're going to hit 4,800 by the end of 2023. Everybody said I'm a permabull. They laughed me out of the town, etc., etc., etc. Lo and behold, we end the year at 4,800. I was right. People come back to me and they ask me again and they say, well, Tom, what's going to be the price target for 2024 on the S&P 500? How much are we going to end that year at? And I said 5,200. That's another 400 points from 4,800 to 5,200. People said that was too high because we're already peaking. Now we're at 5,500 with 300 points past my bullish prediction from January. So I'm here again to actually tell you what I think is going on with the market. And he said, look, the second half of the market is going to be good. Probably not as good as the first half. So don't expect another explosion like we had in the first half, but it's going to be good. It's not going to be bad. Now, what he actually said is this: 5,800 on the S&P 500 by the end of the year, which means a 20% year on the S&P 500 after we had a 25% year last year. That's a bullish cycle that a lot of people are complaining about right now. A lot of people who have left this market in 2022 thinking that we're headed down the hill, so to speak, in a decline pattern, they've missed out on 25% last year, and right now they're on track to miss another 20% this year. Now, this is the point where I want to explain what Tom Lee is talking about. Tom Lee always says this number, and he said it in this interview again. There's $6 trillion parked on the sideline, and that's going to put a lot of pressure upwards for the market to keep going up. What he's actually saying here, it's a point that was, I think, made very well by Josh Brown, which I also showed you a couple of weeks ago. Josh Brown, who actually manages money for other people, he came on the show on CNBC and explained, look, guys, you have people who are very well compensated. They drive Bugattis, Ferraris, Porsches. They have beautiful homes in the Hamptons. So they're very well compensated. They're very wealthy, but they're employees. At the end of the day, they manage ultimately very rich people's money. And their only job is not to lag the indicator, not to lag the benchmark. Now, if they're lagging it a little bit, that's fine. But if you manage money for somebody that's a billionaire and you missed out on 25% last year because you went out of the market and you got them 5% instead of 25%, okay. And now, second year straight, you're about to miss a 20% year, still sitting at 5%. What's going to happen to your job?
People have a job to do, and that job is to earn a return on the capital that's been entrusted with them. And that is a huge driver in the second half of the year in both directions, right? So we saw a washout in October of 2022. This is the reverse version of that. Now you have the Dow, the NASDAQ, and the S&P 500 as of noon today, all making all-time highs together. It's a fairly rare phenomenon, but when it's taking place and you're out of the market and or underweight, it's deafening. You cannot sit there and watch that go on, and not just because you feel a certain way, but there's an agency problem in investing, which is when you're running money for other people, they have expectations, and one of those expectations is you better not trail the SPX.
Now, obviously, that means that your head is literally on the chopping block. And as we go closer and closer towards the end of the year, when it's going to be tested, these people are feeling the pressure. And they're feeling the urge to get back in this market to minimize the losses they've caused to their clients, because missing out on 25 and 20% years consecutively is going to be devastating for their careers and for their clients. Now, another thing that Tom Lee talked about is Bitcoin going to $150,000 by the end of the year. It's currently at $63,000. That's a major increase. He's saying, look, there's going to be a sharp rebound in Bitcoin in the second half of the year.
Tom Lee's going to be absolutely right about the 5,500. Why is he still saying 150 for Bitcoin? Why do that? Why not just focus on stock? Don't stick your neck out, because it was falling below 60,000. Now it's back to almost 63,000. So that 6 trillion we just talked about, that sort of plays into your Bitcoin thesis.
That's right. Bitcoin's probably suffering from the Mt. Gox, starting distributions in July. That was a huge overhang for many years. But if I was investing in crypto knowing that one of the biggest overhangs is going to disappear in July, I think it's a reason to actually expect a pretty sharp rebound in the second half. So I think, 150 is still within.
It's already July 1st. So so you're not taking that off the table. That's still a possibility.
That's right. And one thing to keep in mind, Bitcoin makes most of its gains with 10 days every year. If you take out the 10 best days in a single year, Bitcoin actually has negative returns.
So Tom Lee is basically saying here that Bitcoin is literally going to double within the next 6 months. If that happens, a lot of people will make a lot of money. But the ones who will try to guess the bottom and try to guess the top and time this thing, they're going to miss out on most of these profits. The same thing like they have in stocks. Time in the market is way better than timing the market. Now, where do I stand on both these predictions? The Bitcoin prediction and the S&P 500 prediction. Bitcoin to 150K, S&P 500 to 5,800 by the end of the year. Now, look, when I look at the fear and greed index, I'm seeing neutral, borderline, fear. Markets don't crash when people are expecting crash. Markets crash when everybody's euphoric, where the sentiment is that this market can't go down. It's just too hot. When this happens, when you have exuberance, when you have euphoria, you'll see that I'm going to be fearful, not when everybody's anxious and worried. Another thing is, look, we have great earnings. We don't have an earnings decline. The earnings of these big companies are absolutely insane. Look, over the past 75 years, I've mentioned this before, we had 1,250 all-time highs in the market. That's 16 times per year that we hit an all-time high. I'm not freaked out when I see the market hit an all-time high, especially if the baseline fundamentals like the earnings are great. Now, so far, we had 20% from November 2021 in this AI bull cycle craziness. 20%. I mean, the average bull cycle in the US market is about 100%, 110%. We're not even close. Nvidia forward PE is below 50. The Russell 2000 median PE is 11. I mean, really? Are we that worried about it? Look, another 300 points on the S&P 500, which is what Tom Lee is predicting, is 5.5%. Now, that's 5.5% on the index. When I look at a stock like a Palantir, which I own, that's a 3 beta stock, which means that he's predicting another 15% by the end of the year on Palantir. I'll take it. Now, look, I get nervous when the sentiment on the street is euphoric. I don't get nervous when everybody's panicking and worried that the market is going to crash. I just don't, especially when the forward PE ratio is actually down on the S&P 500. Last year, we had 26 forward PE. This year, the forward PE on the S&P 500 is 22. Earnings went so up that the PE ratio actually went down. In 1999, it was 33. Especially when I look at IPO activity and I see that in 1999, just before the dot-com crash, we had 400 IPOs per year. In 2021, we had 1,500 or something like that. This year, we're on pace to do 150 IPOs. That's it. Look, the top 1% of investors, and I've showed this in the previous video, they take 12 years to trade their entire portfolio, to turn over the entire thing. There's no need for you to be super active. Just stay the course. It's that simple. If you put in $15,000 in the S&P 500 in 2010, not that long ago, and you added another $500 per month, you would be sitting on $200,000 right now. About 80,000 of it will be your money put in through those 515,000, but 120,000 is basically free. It's from the market. It's not that complicated. Tom Lee is right. Bitcoin is actually not that crazy to see at 150,000, maybe not by the end of the year, but it's definitely part of the monetary system. I don't know about the other coins. I will say nothing about the other coins, but Bitcoin is part of the monetary system. It's part of Wall Street. It's not going anywhere. 150,000, at some point, it's going to get there. Probably not 6 months, but it will be there. And by the way, Tom Lee is actually 100% right. From 2003 to 2023, if you missed the best 10 days in 20 years, the best 10 days in 20 years, your investment will be slashed by half because timing the market is simply not a good idea. I hope you enjoyed this video. I'll see you in the next one. Later.